do this then. Let's tell you exactly what it is that you are waking up to as the top economic headlines this morning. This is your official economic review. My name is Simbalaja Charles Ginyage. This is most certainly Metropole Television. Now, Safaricom continued its dominance of the local buzz as its combined investor wealth at the Nairobi Securities Exchange, NSE, shot to a new high of 63% Wednesday, days after getting the green light to operate in Ethiopia. The news that Safaricom had been granted the license to operate in Ethiopia saw investors rush to buy into the company that saw its share gain 8.2% or 3.25 shillings a piece since Friday last week to close trading at 42 shillings and 75 cents Wednesday, consequently adding 130 billion shillings on its market value, taking it to 1.712 trillion shillings, with the total market value standing at 2.72 trillion shillings. Historically, on the local booze, Safaricom Equity Bank Group, East Africa Bureaus Limited, KCB Group, and Cooperative Bank have held more than 80% of the total investor wealth at the NSE, with all the funds save for Safaricom either shedding value or gaining at a slower pace compared to the telecom in recent weeks. Good. Now, joining us this morning, just to put into perspective that headline, in the studio, we are joined by Abraham Mudhagom, the CEO, Miradi Capital. Abraham, good morning.
Morning to you.
Fantastic. Online, we are joined by Gabriela Mwendwa, who is the investment associate of Horizon Africa Capital. Gabriel, good morning.
Good morning to you, Simba.
Happy to have you around. Also, we are joined by Rufus Kamau, who's a research and a markets analyst at Scope Markets. Rufus, happy to see you around, sir. Good morning.
Morning, Simba.
Fantastic. Abraham, let's begin there. And this is the question that I'm going to ask you therefore. Has it become a necessity that for anybody now looking to invest in the local booze, you have to have Safaricom as part of your profile, because indeed they are going to dictate how the market is going to perform now?
I think for me, yes. Okay, that is a mathematical reality.
Yes.
But for me, the issue here is I'm looking at that concentration. It's very worrying.
Yes.
That one company can hold 60, 60, 63, 64, 65% of an entire securities exchange.
Yes.
So with it comes the concentration risk if anything was to happen to that company. And then with the other four equity East African breweries and COP, they go to about 80.
Yes.
So this problem seems to be getting worse in terms of the concentration around very, very few counters. So I think it's a wake-up call for all of us that because I think with what Safaricom has just pulled off in Ethiopia, the value will continue climbing.
Yes.
So I think what this calls for is for us to increase more counters along within the securities exchange. But to answer your question, yes. Right now, if you're putting money and as part of your portfolio, Safaricom
has to be part of it. Abraham, I'm going to come back to you on exactly where the share price for Safaricom is headed, going by exactly that Ethiopia news. Gabriel, let me cross to you therefore. I mean, you hear what Abraham is saying. Well, the question is that market concentration, that one company can carry 63% of the market value. I mean, when we're looking at it, yes, you can celebrate, but at the same time say, hold on. How is it possible? But Gabriel, it's not that there's somebody waiting on the corner for NSE to announce tomorrow that a new high stock value company has been listed to cut down Safaricom's market share. Is there?
No, I don't foresee that happening.
Yes.
Definitely. Anytime soon. And I think this is something that has been discussed before, but there are two key reasons why this is happening. One, it's because you know, of the Kenyan economy. We don't have any big companies in the extractive industry, the likes of Nigeria, Angola, South Africa have those ones. Mining industries, which would form a big share of the market. In Kenya, it's just service industry.
Yes.
And then service, telco is very big. So I don't fault Safaricom from where they are, and it's very good based on where they are, but it's unfortunate for the market because then our options end up being very limited. For example, pension funds who are looking to just be diversified across the market would have to hold close to that 63% of Safaricom, if not thereabouts 50 if they're ignoring other counters. But then there's still quite a number of hidden gems in the market in that people have not found companies. There are smaller opportunities that could actually come up, but not enough to or rather reduce the market share Safaricom has. I think at this point in time, we just have to accept it as is until what you've said happens, a bear comes in and lists.
Pretty much, Rufus. Now, you hear what Abraham and Gabriel are saying, that yes, that is a problem, the market concentration that for Safaricom now, under that particular stock, it's a problem. But Rufus, let's get to understand, when an investor is looking at the Kenyan bulls, does it become very difficult to actually know what our performance levels are going by what is going on now with Safaricom?
I would say that I tend to visualize the stock market as a place where the companies can get to raise capital in order to expand their business.
Yes.
So I know that Safaricom is very concentrated. They have taken quite a big chunk of the entire market, but this is a good thing because it's creating value for the investors. So if you compare this with the other stock market, you realize that it's not the only company that is dominating. If you look at the US stock market, it's actually being dominated by about 5 companies. The firm, you have Facebook, Apple, Amazon, Netflix, and Google. If you go to Finland, you have Nokia dominating. If you go to Saudi Arabia, you have Saudi Aramco. So it's quite a normal scenario. If you have a growth company that is expanding rapidly, then it's going to eventually take a big chunk of the entire stock market. So one of the solutions I would think about is possibly Kenyan companies get into venture into other stock exchanges so that they can raise more funds. And when they do this, then they can expand their businesses, not just locally, but probably in the African sector.
Yes.
For instance, we've already seen Safaricom venturing out into Ethiopia, and we could see further expansion into other areas, which could make it a global company, just like its competitors, companies such as Orange, AT&T, and so on. So I think Safaricom is relatively young compared to what other telcos are doing out there.
Pretty much. All right, now, Abraham, let's get back to you then. CMA has already said, well, we are worried that this can't continue. They've already flagged it that, well, you can't hold 63% of the market of wealth as one telco or a company. What solution can be there? We already hear news of how the NSE is really trying to get more companies signed up, but that can't be the solution. Is it possible to start saying, well, let's think of different regulations that come in and cut Safaricom's market value?
I think I agree with my two brothers.
Yes.
I think there's really no short-term solution to this.
Yes.
Because we are looking at ways of punishing growth, because that's what we are trying to do. These guys have done very well.
Yes.
And they've done so much better than everybody else that their growth sticks out.
Yes.
That is what this means mathematically. So I think what we need to do is to see how we can enhance the rest and new players to come to the market to solve this problem in the mid to long term. But
Yes.
in the short term, we have to hope and pray that nothing happens to Safaricom.
Pretty much.
I don't think we can go beyond that.
Yes.
Because I think their fortunes are going to get better.
Yes.
So you might even see more than 63% in the short term. But in the mid to long term, I think the people running the Nairobi Securities Exchange need to look for ways of now maybe fast tracking if it's people coming on board. But again, they can only bring you on board. They cannot control how well you do.
Yes.
So how this problem is sorted is by other companies doing as good or if not better.
Yes.
That's what it is.
All right, Abraham, just before we cross over to Gabriel, I would like us to look at exactly where we are in terms of the key performance indicators for Safaricom. And as you're going to see that data, Rich, if you can actually pull it up, if you can right now, you're going to see that under free cash flow, they're still doing very healthy, Abraham. And there was one question that you asked last year, that for a company that's as big as Safaricom, that free cash flow issue, is it that there are no places to invest? And now, this is the question this morning because we can actually now see where it is. Is it going to change now that they are now going to invest in a new market? And if so, do we expect for Safaricom to revise on exactly how they've been paying their dividends? Because now this is a new market, you got to put money into it, but there's the 80% tradition that 80% has to go into paying off dividends. Is that going to change in the short term for Safaricom?
Two things. First of all, dividend is a function of profit.
Yes.
That's number one. But then now the paying of it is a function of cash.
Yes.
Now, free cash, this is purely a function of the business they're in. They're in service.
Yes.
I mean, literally, they sell airtime. Literally, they sell air. and so the cash generation is extremely high. They're an efficient company. They've done it well. So stocks of cash, and if you look at most of these technology companies, even if you look at around Apple, they have stocks of cash. Like the other day I was looking at Apple, it has money to pay our national debt twice over in cash.
Yes.
So it's a normal for telcos, especially when they're doing well, to have a pile of cash. This cash they're not going to use in Ethiopia. If you look at Ethiopia, if you look at that consortium, they had a funder with them. So that is coming with its own funding. So that will not affect, if anything, it will probably increase this stock of cash. So I think that phenomenon of cash will not change, and it's a very good thing. When a business is profitable and generating cash, then the trajectory can only be up.
Yes. Yeah. Pretty much. All right, Gabriel, now this is your question as well this morning. I mean, you've seen exactly therefore how Safaricom is knocking out those numbers on the local market. Now, what is therefore the projection for Safaricom with this new news for Ethiopia? Do we expect them to double that in the medium term to the long term?
Well, first to answer your question on cash flows.
Yes.
I think it's fair to say that Safaricom has really failed to pump a lot of this money into investments that would have then put them in gear for the next growth. Because you see, M-Pesa is hitting, it's still growing, but in Kenya it's sort of maxed out, it didn't work in South Africa.
Yes.
So they really needed to have been thinking about their next move. And if you were to ask me, Safaricom should have bought out a bank by now. That's me. Now, to the issue of the Ethiopian challenge, or rather the investment that they're making into. Ethiopia is really a big market, and if you look at 90% of the transactions there are done via cash. So it's a big deal for Safaricom, but it's going to strain their cash flows. That is a given. The government is not going to like it, shareholders are not going to like it, but as much as we have the likes of CBC there, who I think is there as a financial partner to provide a lot of the funds, Safaricom is the majority shareholder. So unless they want to have a lot of debt in that company, which eventually might affect their performance, then Safaricom is going to be making quite a bit of investments there. It's good. It's what we're asking them to do, invest your cash flow somewhere. But, it's still a wait and see kind of thing, given the challenges we have in that market with access, controls by the government. But Safaricom has been making correct decisions for a while. I want to believe they'll continue making the same, and they've done their due diligence. So it's just a wait and see as far as that investment is concerned. But definitely their cash flows are going to change in the medium term.
Yes. Rufus, in 1 minute, if you can, just respond to that same question. Do we anticipate, therefore, for the free cash flow numbers for Safaricom, therefore, to come down now that they're into the new market? And we expect for them to continue with that tradition for 80% of their revenue going into dividends?
I would say that at this moment, when Safaricom is making this investment,
yes,
you're going to obviously experience some hitches in their cash flows.
Yes.
At the same time, when you compare this with the kind of sector that Safaricom is trading in, we can classify the stock as a growth stock. So when it comes to the share price, it's going to be behaving in a little bit of a different manner, because investors are less concerned about the current issues with the cash flows. They are mainly betting on the future performance of this company.
Yes.
So you might experience some really good growth with the stock because investors are betting on future cash flows. But in the short run, you might experience some hitches in the cash flows. The dividends might be a little bit lower. But a bigger outlook, 5 to 10 years from now, could be some really good rewards in this company.
Pretty much. All right, Abraham, let's move together therefore to the next one, where XD Group has announced that its net profit for the first 3 months to March 2021 jumped 64% to 3.7 billion, which they indicate was driven by strong growth in both interest and non-interest income. Now, the lender's earnings rose from 5.3 billion shillings recorded in a similar quarter in 2020, which now places it on a recovery trajectory from last year's dip in profitability, with the coronavirus pandemic to blame for the lender's woes. KCB Bank also announced a rise in its profits in Q1 ended March 2021, albeit marginally. Now, the lender reported net earnings of 6.37 billion in the review period compared to 6.26 billion the year before, which represented a 1.8% increase in its earnings. Now, the lender indicated that scaling down of its mobile loans segment to mitigate defaults in the wake of the economy was down to its depressed earnings that saw non-interest income consequently fall 20% to 6.3 billion shillings from 7.8 billion shillings. Cobb Bank, another big boy, also recorded a profit before tax of 4.98 billion shillings in the first quarter, which was a minimal drop of 2.6% compared to 5.12 billion shillings recorded a year earlier in the same review period. National Bank of Kenya continued its rally from a loss-making position to record a profit after tax of 184 million shillings, which was a 19% growth compared to a similar period last year. Are things getting back to normal? Because most of them are saying, well, we are recording increased profits if you go back to last year, same period.
Okay, for me, not that I'm skeptical, but I would want to give it a bit more time before I make that call. Because if you look at those numbers, those banks have behaved differently. One has gone up very sharply, one has gone up marginally, and one has gone down.
Yes.
Those are the three big boys in this country.
Yes.
Then NBK has gone up from loss to. For me, I'm still waiting to see how the provisioning is going to play out. Because don't forget, these are management accounts.
Yes.
These are not audited accounts. So they've been produced by the bank or by the client. So when this will be subjected to provisioning, especially under IFRS 9, from an auditor's perspective, from central bank's perspective, these numbers could change significantly.
Yes.
Either way, but mostly on the down. So for me, I would want to watch their performance a bit, another two or three quarters, to see the full impact. Because remember, a lot of things like previously we were operating where central bank had held a lot of things.
Yes.
Had said don't do this. Now they've opened up. But the fundamentals in the economy have not changed. We all know that. So the thing is, the businesses that are struggling are still struggling. The people who are not paying are still not paying.
Yes.
So if the fundamentals have not changed, then we need to have these numbers will only stand if they can stand the test of provisioning. So for me, I will hold my comment for another 2-3 quarters, and probably wait for the end of year results to really give meaning to these numbers as they look.
Yes. I'm going to come back to you on those news for equity, because we do know they actually did withheld the payment of their dividends for 2 years running. But that really means something in their Q1 results. Gabriel, let me talk to you about that as well. Abraham is saying, well, hold on. I mean, the fundamentals in the economy are still the same. But CBK the other day was saying, well, we don't think that they are the same, because they're saying, well, if you look at that non-performing loan book, it's now come down from 14.55% to 14.2%. And they are saying that the banks now are heavily into recovery of their assets in the economy and auctions just to get that money back. Are the fundamentals the same? And how do you analyze those results that the big boys are giving us this morning in terms of Q1?
Okay, so just to start with the status of the economy, Simba, is that any business that was really weak did not survive last year. So the banks, ideally, if you're practical, you've already taken an excuse and provision for that amount.
Yes.
And we saw the growth in loan provisions as of last year. Now, what really stands out for me, and it's not even the growth in interest income, because that was expected. You had a freeze in interest payments that has been paid. No big deal. This is money you delayed collecting, you are now collecting, subject to accounting policies. So that's not news. What is really news is about, and I think for a bank, we have to look at the balance sheet. Equity is doing great as far as the balance sheet is concerned.
Yes.
They still have a lot of cash. They're holding deposits of over 100 billion. They have half of their loan book is also in government securities. They have a lot of cash they can deploy into the economy. So that tells you that this bank is not really shaken by a lot of the things that happen. Now, what I would look at to just respond to what my colleague has mentioned is the movement in the net non-performing loans. Now, if you look at Equity Bank, because of the provisions they made last year, they actually reduced their net non-performing loans by up to 12 billion shillings. If you look at counterparties like KCB, their net non-performing loans actually grew by 17 billion shillings. Tells you KCB coming next quarter has to increase its provisions over the next few quarters.
Yes.
But that might not be the same case for Equity Bank, requiring to increase provisions because their net NPLs have decreased. There's a very robust mechanism of tracking non-performing loans, and that is clearly monitored and guided by CBK. So my expectation as far as Equity Bank is concerned is that we will not see another spike in provisions because they have already managed to reduce their net NPLs as at now.
Yes.
That is not the same case for KCB. I've seen a reduction in COP, I've seen a management in DTB, but for KCB, that is where I'm actually worried if we're talking about the two big players in the sector, in that their net NPLs are actually quite high, which means we expect some increased provisioning in the next few quarters. But as for Equity, they have cash, they should pay a dividend, and their growth, they've maintained the growth path that we expected them to stay on.
Pretty much. All right, Rufus, let's talk about what is the general sentiment, therefore, about those banking quarters on our markets. I mean, would you summarize for us on exactly how they're doing, and are they expressing the same sentiment that Gabriel and Abraham are talking about this morning?
I would say, looking back in the beginning of 2020, when the CBK lowered interest rates to a record 7%, this was to incentivize the commercial banks to give more loans to the people. But looking at the books and what the banks are displaying, then they are not quite achieving the same goal. So getting the loans at the cash at 7%, these commercial banks are actually investing back into the government at a rate of 12.75%, which is basically the rate that the bonds are offering right now. So this is highly lucrative, considering that the government assets are not having any kind of risk compared to the risk associated with lending money to the people. So looking back in 2020, it did not make a lot of sense to lend money to the people because the businesses were not operational. So if you are borrowing money from a bank to go invest in a business, people are not operating, they are confused, it was very difficult. But looking at the current condition or status of the pandemic, the rules are easing out.
Yes.
And also if you look at the deposits, we also the recent news that people with balances of over 100,000 Kenyan shillings were going up, and this was really good for the economy. So this going up of emergency fund meant that people have less hope into the reopening of the economy and businesses going back to normal operations. So what actually happened is that people are strained, they don't have money, and they don't know the future of the pandemic. So if people have hopes, they are not going to have less funds invested in their emergency funds.
Yes.
There will be less deposits, and they will be investing much more into businesses. So looking at the outlook, I would say that the economy is basically depending on the status of the pandemic. So if you get more and more vaccinations, then there could be reopening, and bank will reinvest more money to the people rather than investing in the government.
Yes.
So far as per the current situation, I believe the banks are going to continue performing next quarter, considering that they're investing directly to the government and there's no risk in that.
Pretty much. All right, let's intimate the next conversation like this as we go out on a break. Abraham, just one word. MPC CBR, 7%. 9th consecutive time. One word before we go on a break. What does it make you feel?
Well, I think now we've reached a point of impotence.
Leave it there. Yeah. Gabriel, 7%, ninth consecutive time, MPC. We're going to come back and talk about that. One word from you.
Let's give them a statue rated 7%.
Rufus, ninth consecutive time, MPC, with a lot of explanations around it, but the figure same. One word before we're going to break.
So it's perfect, but we need the interest rate cut back.
That's it. Woo, that's an interesting conversation once we come back here on a Metropole Television, because we are asking the question, what is this magic 7? Once we come back.